Hi, this is Roland Jean Charles from PMI JCM Realty Group, where we manage properties from an asset management perspective. So, I think one of the biggest issues that tenants, or not tenants, but landlords and property managers come across is funding distressed properties, right? Where do you get the money? How do you get the money to fund distressed properties, right? So, one way you can get the money to fund distressed property rehabs is to have a JV, right? A joint venture, someone with deep pockets that's going to be able to provide them funding for you to do the rehab, and they get a cut of the profits at the end, right? But you're not always able to find those JVs, those altruistic people. Well, not really altruistic, but people who are looking to get a return on their investment by them putting in the money and trusting you to do the work and get that done, right? Sometimes that ends disastrous, right? For the most part, whenever someone wants to do a rehab, they go to a bank to get the money. However, most banks, they're not in the business of lending money to fix properties, right? Like, so they'll give you money for the mortgage to get the property purchased, right? But they're not in the business of taking the risk of giving you money to rehab properties. And so typically what happens in that case, right, you have hard money lenders or private lenders. I mean, that can put up the funds for you to do the rehab and sometimes the purchase, right? But these are very, very high interest rate loans, right? I mean, I've seen interest rates, I've paid interest rates as high as 20% and I'm not talking about 20% back in the 70s or 80s when interest rates were just high for no reason. I'm talking about as recently as 2005, right? 2006 and 2007, right, where interest rates are historically low. When you go into when you go get a hard money loan, the rates are astronomical, right? But these loans are meant to be short-term loan, rehab loans for you to pay for you to pay to get the rehab done. I mean, 6 months, no more than a year. Then you refinance it to a long term after the property gets seasoned and you have the property for about a year. A bank will give you a long term 30-year mortgage and get your rates low so that you can start getting some return on your investment, right? And so, but what if you can't get those loans? Like, what if you don't want to pay those high interest rates? Like, how do you get the money, right? Where do you get it from, right? And so, what I'm going to talk about today in this article is how to rehab distressed investment properties without high interest loans. So, HUD, right, Housing and Urban Development, they actually have a program called a 203K Rehab Mortgage Insurance Program, right? And what I'm going to do is talk to you about that a little bit, but more so, I'm going to talk to you about the benefits of being able to, the benefits of using these funds to do your particular rehab, right? So you can Google the 203K loan, how it works. And typically what happens with those 203K loans, the way it's designed is for a retail buyer. So let's say I am I'm new to the housing market. I want to buy a home, but the home is distressed. It's not in good condition. I can use the 203K loan as a retail buyer, someone who's going to live in the property for long term, right? I can buy the property and get the mortgage and get the money to fix it up with the 203K loan, right? And that is backed by the federal government, right? So that's the benefit, right? So if I'm one of those people that I'm looking for a property, I can't afford any high-end homes or anything like that. I can buy a home that's in distress, and the federal government would back or support getting additional funding, and that's why the banks would be willing to loan you the money so that you can go ahead and rehab the property, and so you can live in that property long term. But if you're an investor and a landlord and you're not looking to live in the property long term, guess what? It doesn't apply to you, right? You're not able to use those funds, right? And some people, they house hack and they're able to, buy the property, live in the property for a year, right? And then after they live in the property for a year, then they're able to, move out, buy another home, and they've used a 203K loan to rehab the property, right? So there are ways to get around that rule, right? We don't recommend you break any rules or try to skirt or work in the gray, but anything that you can do to speed up the process and get a property rehab as an investor to get it on the market for a tenant, so you can get a return on investment, definitely helps a lot, right? And so what you want to do is you want to take advantage of this 203K loan. And what happened with the new tax law that came about back 20, what is it, 2020, 2016, right? 2017, whenever that law passed, um, they created a whole bunch of opportunity zones. And then at some point, what HUD said has said, hey, since we have all these opportunity zones that target distressed areas, we're going to give investors the ability to use the 203K loans the same way as a retail buyer would to rehab properties, right? So what that does is for all of those small investors who are looking for financing to rehab properties, they are now have the support of the federal government basically to get loans, to use a 203K loan for investment purposes, not just for retail buying or purposes, right? And this is, this is a game changer, right? And I don't know how many investors or landlords know about that, but if you have a property that's in a opportunity zone, right? And that property needs to get rehabbed, then you rehab it for to put a tenant in there. You can use a 203K loan fund to do that, right? So what are some benefits of using your 203K loan to fund the rehabbing of the property? Well, the first thing is you're breathing life into distressed homes and distressed neighborhood. The whole purpose of opportunity zones and the whole purpose of 203K loans is to help traditionally distressed areas that typically don't get a lot of funding or support from investors. It incentivizes them to invest in those areas. And if you look at the real estate market, it's really cyclical, right? I mean, I have a 20-year timeline that you can look at neighborhoods as they change, right? So a neighborhood that's good today may not be good, 20 years from now, depending on when that neighborhood was built. And a lot of people tend to want to go to neighborhoods that need, I guess, that are distressed, that need work. And the reason why sometimes is because they're close to a lot of anchors. My advice to any investor that's looking to invest in property, look for anchors, key anchors that people want to be near, right? And it may not be an area that looks like attractive today, but if it's next to a university that's been there forever, if it's next to a mall that's a landmark, or if it's next to the ocean, right? If it's next to things that people key key areas where people want to be things that people want to be next to, you should think about investing in those areas because typically, things turn around. That's what happened in Manhattan, back in the 80s and when Trump was doing it. That's what happened in Brooklyn, right? That's what's happening in uptown Tampa right now, near the University of South Florida, right? They used to call that place Suitcase City, and they're doing a whole bunch of redevelopment there now. And that whole area is basically an opportunity zone being redeveloped. But you have key anchors like the University Mall, you have anchors like Busch Gardens, you have anchors like USF. Those landmarks aren't going anywhere, right? And so those are key anchors that people want to be around. And so that's a great place to do your development. And so it breathes a great deal of life into those areas, and it brings neighborhoods back, and all the doctors and the nurses that work in the VA hospital near there, the professors that work at the university, they're all going to want to live close to where they work. And when you have investors pouring that kind of money into the area, it definitely does a great deal to change the dynamics of the area. And the 203K loan, the changes that they've made to it allow smaller investors to get a piece of that pie as well. And so the next benefit is, and it's a perfect complement to commercial and multifamily projects, right? A place like USF, you're going to have a lot of student housing, right? And so you have an opportunity to have affordable student housing. And there are a lot of big developers that come in and they want to redevelop close to that area. And with the 203K loan program, if there are single family homes, which there are a whole bunch around there, You have small investors that can take advantage, and it complements greatly those multifamily projects and those commercial projects that are springing up. Some of them are mixed use, right? Commercial and multifamily mixed together. And it's a great opportunity for investors to really tie themselves to on the coattails of a lot of big developments that are going to be happening earlier on. The sooner you get involved in the projects, the better you're going to be in getting a great return on your investment. So it's a great complement to those projects, and it really helps move things along a lot quicker. And the last benefit is it helps. It makes the appreciation come a lot faster, right? When you don't have to house hack and live in a property for a year just so you can take advantage of the 203K loans as a small investor, it really puts you ahead of the curve and being able to get the property rehab quickly, get it rented quickly, and getting tenants in there and getting a return on your investment, increasing your ROI, and getting that good cap rate really quickly, and most importantly, getting a great cash flow, right? And so those are three great benefits of the change that they've done with the 203K loan to allow investors to use those funds for rehab. Now, it's our goal to keep our finger on the pulse of what's happening in the real estate market, particularly in the Tampa metro area, because we're based out in Temple Terrace, which is been rebranded Uptown. Of course, the city of Temple Terrace is still going to be here, but it's part of the Uptown redevelopment project. And if you found this topic useful, please sign up for my free webinar. We're going to talk about how to streamline your property management business, or as a landlord, if you're self-managing your property, how to streamline your portfolios to maximize your growth. And we're going to take a deep dive to explore that in great detail. And it's all for free, so don't miss that. And if you want to learn from like-minded savvy investors, join our Facebook group. It's a great group that we have open for investors. It's all free. You can exchange information and really pass deals to each other and really learn about what's happening in the market and how to get a good return on your investment, regardless of where you are in the country. And if you have specific questions about property management or strategies, or you just want help looking at your additional portfolio, two heads are better than one. And we do this all for free. You can put a meeting on my calendar, just a short 15 minutes. We can connect and we can talk about your portfolio, particularly if it's in the Tampa metro area, Temple Terrace, Hillsborough County, Pasco County, Clearwater, Pinellas County, even if it's in Winter Haven, Lakeland. We're able to talk to you about those properties and those portfolios and really help you make decisions that's going to help your revenue and your cash flow grow in those areas. Again, Roland Jean Charles, PMI JCM Realty Group. You can contact me on my website, www.pmijcmrealty.com. It's rcharles@pmijcmrealty.com for my email, and you can contact me at 813-333-9617. But if all else fails, join my webinar, join my Facebook group, and put a meeting on my calendar. Thank you and have a great day.